Okay, we're using their spare labor. So
Exactly.
I'm
okay.
assuming, that might make an ass out of you. I mean, but I'm pretty sure the Bay Area stats.
Well, what happens when you say I presume? Then you make
presume instead of assume?
Yeah. Welcome to the Best of Investing. I'm Edward Brown, your host. Here's our format. A bunch of guys sitting around a bar. There's no bar. Having drinks. There's no drinks either. But we're talking business, and you, the audience, are listening in. The Best of Investing is actually a radio show that has been around since August 2010, and it airs every Saturday on Fox News Radio, 9:10 a.m. at 1 p.m. Now, we're not a political show. We're strictly business, so everyone will be happy with that. Remember, I'm Edward Brown, wishing you the best of investing. Are you ready? Let's go. And today's special guest is Robert Schiff, who is a mortgage broker and has been since 1994. Prior to becoming a mortgage broker, Robert was a real estate agent, and he has over 30 years of experience buying, remodeling, and selling houses. And before we actually get into saying hello to you, I wanted to come up with this interesting fact here that the cruise ship disaster that just happened, how much do you think it's going to cost the cruise industry? Take a guess.
Oh, in terms of notoriety, huh?
Yeah, I mean, with the pictures that everyone's seen of the ship, like half.
That is a great picture.
Isn't that a great picture? I'm going to suggest that they put that on their brochures.
I don't think they accept that.
They wouldn't accept that. Okay,
no.
Take a guess as to how much you think it's going to cost them.
I would guess
probably the millions.
Hundreds of millions.
Exactly.
Really?
You remember a few years ago with Tiger Woods and the old infidelity thing? Mm-hmm. They figured that cost golf $1 billion.
You don't say.
Yeah,
that's amazing.
Wow. I wonder if someone's going to sue Tiger on that, but I guess you can't kind of do that sort of thing. So
he wasn't on that cruise, now was he?
No, not that I know of. Okay, Robert Schiff. We've got a lot of great questions for you, and I think Mark.
Great real estate.
Actually, I've got the first one here.
You do.
Okay. How can I determine if I am eligible to refinance my house? With my house being worth less than it was several years ago.
That's
a really good question, and it really is pertinent to so many people. Basically, anybody that either bought their house, I'd say, in the last 5 years, or refinanced it within the last 5 years and got a large chunk of their equity out, is now facing, even in the Bay Area, probably being, it's called upside down, where they possibly owe more than the current value of the house. And conventional lending hasn't allowed borrowers to get those loans, but there are some government programs that there's been a lot of hoopla about that would allow a bunch of those people to refinance and potentially lower their payments so they would be more likely to stay in the house.
Okay, well, you kind of jumped ahead on one of those questions, but that's okay.
Well, that's actually we keep seeing those in the newspapers almost on a regular basis. They keep talking about these proposed government programs. Is there anything actually been approved that's going to be enacted that might help people that are underwater?
Well, the programs that are coming online now are the second generation, so there's already been one generation of programs available.
Did it actually work, though? I didn't actually hear anybody
compared to the projections, they made it sound like it was going to take care of millions of people.
Right.
And the fine lines, when you got down to it, there were little stipulations and footnotes that said, well, you had to have not gotten a loan after a certain date in 2009, or I've unofficially helped people try to get through these programs, and the lenders don't seem to really want to help people in the programs. That's been my experience.
Did they not get anything out of it?
People in the industry are talking, and they can't figure out why. For instance, I have a client of mine who I'm just trying to help, and they own a house in Fairfield. They owe $300,000 on it.
Okay.
The house is worth about $175,000.
Okay, so they're upside down.
They're upside down, and they've stopped their payments. And I'm trying to work with them with the bank to modify, and I'm telling the bank, these people don't want to leave the house. They're willing to pay. Why don't you lower the interest rate from 6% to something more reasonable, like it is now 4%, and maybe lower the loan to $250,000? Then you'll have a performing loan that's more than the value of the house. And if you don't, the people will stop paying, you'll foreclose on them at a great expense to yourself, you have to list it for sale. At that time...
Yeah, but Robert, you're talking logic.
Yeah,
they're talking logic to a bank.
Well, but it's bankers, and there must be some way that we're not aware of that when they foreclose, they get reimbursed by some part of the federal government.
They must, because I remember back in 2008 when this whole thing was starting to unfold, we had people who were, maybe they were immigrants, they were legal immigrants, and they'd have maybe two families who owned the house together, and they wanted to stay in the house. But when interest rates had gone up, it made it cost prohibitive. And even though they were upside down, they said, listen, we still want to pay our mortgage payment, but we just can't pay what the new payment is. I mean, it gets kind of ridiculous.
Well, and this has been the problem all, for the last couple of years, is that the complaints that the Obama administration has put forth these loan modification programs and supposedly provided incentives to banks to work with borrowers, but anecdotally, and Robert, here's just another example. I'm just not hearing a lot of success, and it's amazing because your example makes perfect sense. If they take that property back, they're not even going to get the 175 that it's worth, because after the holding costs and the legal and et cetera, they'll be lucky to put $100 grand in their pocket.
Well, especially when people find out it's bank owned. Sure. Automatically they'll reduce it. So what did you get successful on that, or is that still being work in progress?
It's still a work in progress.
Yeah, well, it takes a long time
I've been successful with one client, and unfortunately, after the modification program went through and they were starting, he died. So that's been my record.
That was a little inconvenient. I wonder if that was the cause of it. It could be in many cases.
So Robert, we've got these super low interest rates, and how is refi activity? Is it? I know it was quite busy a year ago. I know a number of agents like yourself in the market who were doing gangbusters there for a while. I mean, how's the activity now that we're going into 2012?
Well, right now the rates are. Maybe not this minute, but within the past week or so, they're lower than they've ever been.
Right, they're in the threes now, is that correct?
They're in the threes. It's even there's some 10-year loans that are under 3%. Some government programs.
Hear those radio ads.
Yeah, and they're real loans.
Are any points on that?
No, everything that they quote pretty much is without points.
Is there much volume on that, though? I guess that was my question. Is that are there many people who are qualifying for those? Especially if you've got a significant percentage of the population that's underwater, and then you've got the other issue. Do I qualify? Do you have a high FICO score? Can you verify your income? What's the loan to value? Yeah. I mean, how much of that activity is actually happening?
The loan procedure is very medical now. They really look at everything.
Wait, no more 115% loan to value loans?
No. Someone called me the other day and said, I'd like to refinance, and I said, what's your job? He said, I'm unemployed, and I asked if he still had a TV and watched the news at all. I mean, it's amazing to me.
There's no more stated income loans, as I understand.
There actually are a few that are stated. Someone just told me a local bank in Marin is doing seconds that are stated income. But
on a second?
On a second.
What are the rates?
Just prime plus 1 or 2. So.
Whoa! What kind of LTV?
They'll go up to 75%. So,
but it doesn't matter how big the
there may be catches once you get into it that you have to deposit a large, become a client of the bank for all your other resources. I'm not sure of the particulars.
Yeah, if you need a $100,000 loan, you have to deposit $125,000 in a CD.
Yes, I don't think it's that bad.
No, it's not that bad.
But generally, no, that the stipulations for getting a loan are much harder than they've been. It's a reaction to the just fog the mirror and get a loan that we all went through, and
sure.
sort of where we are now. But as someone said to me a couple months ago, if you look back in the 60s and the 70s, especially the 60s, your choice was to go to a bank and get a 30-year fixed loan, and it was 2 points plus $250, and you had to show your taxes and qualify. And so that's the way it had been for decades, and we tend to forget that was the basis of real estate financing.
But then people got, I don't want to say smart, but I guess opportunistic, and said, well, if I can package a whole bunch of these loans together and sell them on the secondary market and blah, 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 blah. Okay, we are going to go to our first commercial break, and remember the theme is the old TV show, The Addams Family. What is the name of the hand that helps everyone around the house? And we will be right back. Here's segment number 1.
Was that Addams Family or the Munsters?
No,
that was Addams.
I like that. Do that. Do that.
I will.
I like that. First, I ask the question.
How do you decide the questions and find the answers?
He's just has to get creative.
Secret. The next
secret sauce.
The next trivia question is going to be. Next trivia question is going to be. Oh yeah, headset's off. Yeah, because this is.
All right.
Next trivia question is going to be, what's my favorite color? Green. I mean blue.
Are you finding people are choosing different amortizations?
No, I mean everybody at our office really sees the incredible benefits of doing a 15-year loan. The savings are phenomenal.
Yeah, they sure are.
When it comes down to it, a lot of people don't want to commit to that extra, $500, $700, $900 a month. If you're in a situation where that's meaningless differential to you, that's great to do. But
Guys I hear all the time say, don't pay off your home mortgage or keep a home mortgage, or don't refinance for the purpose of paying it off early if you have other opportunities to make more money. So it's an interesting exercise,
and you see both sides of it. I've had people, go into a 15-year and then several years down said, "Gee, I'm losing my tax benefits here."
Well, that's just it.
And you're either going to have the goal is to either have your house on free and clear, and you don't get the tax deduction. However long into the future we still have that, which I think will be a long.
Makeup, please. Thank you. Now the thing is, when you did that, though, the camera saw you, not me. You had to come to the side. Go ahead.
Yeah.
Go ahead.
Makeup, please.
Makeup, please.
Kiss and makeup.
Kiss and makeup. There you go. That's it. Okay. A comedy show. I tell you, everybody's a comedian. I get no respect.
All right.
Okay. Okay. So you remember your Munsters
Yes.
or Lurch thing? Okay. All right. Good show so far. We'll continue on with the questions when we get back after. Wait, I loved you. Hold on. You bubble-headed booby. From
You
Lawson's,
bubble-headed booby.
from Lawson's Space. Remember that? See, we're the same age, so we grew up at the same commercial.
Dr. Smith.
Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host, Mark Hahn of Pacific Private Money. When we cut to the first commercial break, we asked this first trivia question. And remember, the theme is the old TV show, The Addams Family. What was the name of the hand that helps everyone around the house? Mark.
Well, of course I remember Lurch.
That's very good.
That'd be the thing.
That thing. That is correct.
And, my goodness.
My goodness. We are in the studio with Robert Schiff, who is a mortgage broker, and there is another question. I think I'll ask this one. How much do you have to have for a down payment nowadays?
Well, as you do still have to have something for a down payment. There's no longer 100% financing, but FHA program, you can get a loan with as little as 3.5% down payment. FHA loan. Everything in the house had to be fixed, everything had to be perfect, and there were a lot of impediments to getting the loan, which is not true at all now.
Really?
So how come people aren't just jumping off the shelf?
Well, they're slowly starting to realize it. I'm involved in a purchase deal right now, and the clients are getting a 4% credit from the seller, which is going to pay all their closing costs, all the FHA, all the mortgage insurance costs, all their basically, they were putting 3.5% down and getting a loan that's slightly better than a conventional 30-year fix.
Wait, isn't that, are they effectively getting no money down then?
They're putting 3.5% down.
Yeah, but then if they're getting a 4% credit.
They're with the mortgage insurance costs and the closing costs where they have to start an impound account for their taxes and insurance and pay 1 month's mortgage payment and pay all the closing costs, that amounts to about 3.5%, and the extra is going towards part of their first payment.
So let's talk about qualification then for an FHA loan. So there's still opportunities to buy with little down, which is great news for people who may have thought, now you have to have 20% down, which in the Bay Area is an awful lot of money, even in the lower price neighborhoods. So,
Okay, 3% down.
3.5%.
3.5% down. And what would the rate be?
It's somewhere under 4%. It could be
Even for the jumbo?
Even if it's over 400,000, up to 625.
So you were going to say on the FHA loans, what's how long between a foreclosure before you can qualify?
It's
for that?
I'm sorry. For an FHA loan, it's just 2 years.
2 years. Okay, well that's important because there's an awful lot of people out there, and many that I know personally who are renting now.
And we'll be right back.
Sucks getting old.
Was that action?
That's action, yes.
Action.
That actually helps him do when he edits things together. Okay.
You'd think one of us could have clapped for him, just so you didn't have to come all the way
Well, that's
over
what I did last time, but he said I might get hurt because, like, just walking through.
And your name's Kramer,
Yeah.
which is the greatest cameraman name ever.
Totally.
So that's awesome.
Okay, you guys ready? Okay, and away we go. Welcome. You're listening to the Best of Investing on News Talk 910. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. And we were on a little hiatus there for a couple of weeks because of Cal basketball, but we're back.
We're back.
Go Bears.
Yeah, Bears. Yeah, for those of you listening for the first time, here's our format. A few guys sitting around a bar having drinks without the drinks, talking business with you, the audience listening in. I'm your co-host. Excuse me, I'm actually the host. I'm the host, Edward Brown. And I'm pleased to have as my co-host, Mark Hoff of Pacific Private Money, California's fastest growing private lender, and Rick Warner of Keller Williams Realty. And today's trivia theme is association. I will name the actor, and you're going to tell me the TV show. Our website is bestofinvesting.com. Check us out on Facebook and hit the like page because you like us. Didn't Sally Field say that? You like me. You really like me.
That's
Yeah.
right. You got to be old to remember that one.
That's
Very
true.
suggestive there. You like us. It was like almost subliminal, but not really.
No, that's true. Okay, and we're also on YouTube by typing Best of Investing Radio Show. Also, we're on television, Comcast Channel 26 at Saturdays at noon and Sundays at 6 p.m. And Mark, get right into it because you got some great stuff on Zillow.
Well, yeah, we've got some real estate news for you. You know, my little company is Pacific Private Money, and we make hard money loans to real estate investors. And Rick over here is a superstar realtor in. Are you consider yourself based in Marin or Sonoma or kind of
Marin and southern Sonoma. Yeah.
Okay, awesome. And so we're gonna, three of us, I guess, will be batting around some of the interesting numbers as we're getting into the new year
Sure.
here. And do they still say that like the selling season starts like after the Super Bowl? Is that still?
Yeah.
They used to.
Yeah, exactly. I mean, that is kind of that's the boilerplate answer. Although I will say over the last few years, sales have been driven more circumstantially rather than making a conscious decision around timing of marketing, right? So
yeah,
in other
that's
words,
right. Honey says, "Hey, dear,
it's time to buy a new house.
Yeah, it's time to buy a new house.
Exactly.
Tape the Super Bowl."
There's been less of that and more death, divorce, short sale, foreclosure, all of those circumstances. So, but we're seeing less and less of that and more back to the traditional sales system.
Yeah, although I'm certain in the Bay Area that's probably going to hold true because I can't imagine many open houses being very popular Super Bowl Sunday coming up.
So I would have thought the same thing. We did several open houses during the last Niner game, the big championship series. Huge turnout.
Really?
Believe it or not. Yeah, I wasn't one of them. I was watching the game. of course.
During that time period.
During that time period, yeah.
Wow.
So anyway, there was an article in the paper out this week from Zillow, and for those of you who may not know, recognize that name, Zillow is a website that predicts home prices in neighborhoods all over the United States, and some people like it. Some people think it's the numbers are off, either too high or too low. I like using it in my business, if nothing else, just to see what the relative values between homes and neighborhoods are. Maybe not so spot on, but Zillow, they put a lot of energy into their website and the industry, and they have an article out this week. Actually, it was in the Chronicle, Kathleen Pendergrass's article. Kathleen Pender, sorry about that. She wrote about how Zillow expects values in the San Francisco Bay Area to grow in 2013, and that's really not news to any of us or any of you who already kind of follow the market, but because we are up in 12 and they're predicting values to be up again in 13, and really what's driving that are two things. One, they talk about the drivers being strong employment, which we do have, especially in the tech sector, and inventory tightness. And here I'm finally seeing it in print. Inventory tightness partially attributable to continued high rates of negative equity. And what that means is if you're talking about 20 to 25% of Bay Area homes with mortgages are still underwater, meaning they're worth less than what's owed on them, that's a lot of property that could potentially be, you know, on the market. There are people who are in those homes who probably would sell if they could, but they can't. So, you know, we're struggling.
What about some of the banks that are holding property and they're renting them out? I mean, that's still going on, isn't it?
I don't know any facts that that's actually accurate.
Okay, so the banks are maybe they're foreclosing and they're just keeping they call it shadow inventory.
The shadow inventory again seems like a big myth to me because we've been hearing about the shadow inventory for 3 years.
Yeah. 3 years now, yeah.
It's always the 2 quarters away. It's going to be huge. You got to watch out.
Yeah.
And if there were strategically holding on to assets, now would be the time. We have. I don't know when you want me to share those inventory stories with you, but I mean,
at the next segment.
Yeah, it's ridiculous how low the inventory is. So if I was somebody thinking about selling, this would be the great time to do it, and be a great time for the banks to do it because there's so much pressure on that, and that's why the open houses were so busy. I mean, there's just nothing to look at, and so it's a frenzy.
It is a frenzy, and so we're looking at Zillow's predicting 7% growth in home prices, and that may actually turn out to be rather conservative.
I think that's conservative.
Because I think we had, depending on who you read, there were varying measurements of what prices appreciated last year, and in many submarkets around the Bay Area, it was double digits.
Yes.
And especially if you're in the tech area of Silicon Valley, we've seen some incredible double-digit increases in prices, but. Really, it's the big unknown, as I see it going into 13, is the inventory tightness going to get worse, or is inventory somehow going to miraculously materialize that the banks are going to, foreclose on more properties, or will prices rise enough so that people who are nearly underwater actually can now sell their home and not have to have their credit.
See, what happens to that? If it rises large enough, then do they suddenly start selling, and then do you get another flood in the market?
Yeah. We have that going on right now. We have, for the longest time, everything that came on the market was either foreclosure, short sale, or, of course, death or divorce, but it was mostly those two. And now it's not nearly as often, and we do have people that, have been sitting kind of waiting for their opportunity. Now we have these move-up buyers, which we didn't have any move-up buyers for a few years.
Right.
Yeah.
And now we have lots of move-up buyers, which means they're selling one, buying another. And the dilemma is, like, how do they go about that? How do we can sell ours quickly, but we can't write an offer on the other one because we can't make a contingent because they're going to get 10 other offers or 20 other offers.
Well, and isn't there some also, like, back information that basically, like, comes off the credit report, or, they finally have had their job for a couple of years, and so now they're qualifying for loans, whereas a year ago they weren't. There was a reason why they couldn't qualify for a loan.
I think, but I think the bigger thing is that interest rates they're ridiculous. 3.5. They're up a little bit now, 3.65, whatever they are, but they're still super low.
Okay, hey guys, we're going to cut to a commercial break. Rick, when we get back, you're going to share with us some kind of very interesting numbers that I have a hard time believing, but I believe it because you say it. So here is our first commercial break, and here is the trivia question. Again, the theme is association. I'll name the actor, you tell me the TV show. The star character of this scary soap opera in the 1970s was Barnabas Collins. What was the name of the show? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190 to answer this question. The star character of this scary soap opera in the 1970s was Barnabas Collins. What was the name of the show? And we'll be right back. Stumped, huh?
Barnaby Jones.
No,
that was a detective
Barnabas
show.
Jones.
I don't know of any scary soap opera.
Scary Barnabas Collins.
And you said that was his name or his
That's the character.
The character's name, yeah, Barnabas Collins. When you say it, I'll remember it.
Yeah.
But
You guys are old enough to know. See, in the 70s, I was just a child.
of course, I was a child of the 70s.
Yeah, in the 60s.
Actually, the 60s, yeah. Child of the 60s.
At least it wasn't the 50s.
I was born in '69.
Were you
Really?
Young.
Holy smokes,
I was 59.
you're a child. You allowed to have a driver's license?
Jeremy was 79, I think.
No way.
Yeah,
Punk.
Man, now, young children.
got his whole life ahead of him.
Uh-oh. What'd I do?
This one makes sure that we can't pick you up, but we pick up the important people.
Okay, good. As long as we pick up the important people. He's a nice guy.
Mark and Rick.
You guys ready?
Yep.
Okay, here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hoff of Pacific Private Money and Rick Warner of Keller Williams Realty. When we cut to the first commercial break, we asked this trivia question. The star of the scary soap opera in the 1970s was Barnabas Collins. What was the name of the show?
Was it Dark Shadows?
Yes, it was.
I remember.
Did you Google that?
No.
You finally remembered it.
Percolated in my mind.
Very good.
During
Dark
the break, we were both stumped. But
That's right.
just came
Dark
to me.
Shadows. Now,
Not that I ever watched it. I wasn't into that.
I watched it
I was
in the
more a
beginning.
Batman kind of guy.
That was scary too.
You guys are so old.
So old, I know. I know. I tell my favorite thing is that I was so old that when God said, "Let there be light," I was the guy who flipped the switch. Okay, so Rick. Now the audience has been hanging on this whole commercial break.
right.
Give us those figures.
Well, here's just to kind of prove the point about inventory. This is really, really ridiculous. This goes back to 2004.
And we're talking about real
2005.
estate resale inventory.
We're talking about the inventory of real estate, right?
Yep.
And I'm just going to take one city, San Rafael, because that's where we're sitting right now. In 2012, total homes sold, now this includes everything, condos and everything, 695, which, by the way, is up 125 houses from 2009. But beside that, 57, that gives you an inventory of 57 houses a month that are sold.
Okay, you divided that by 12. Basically,
Divided
700 by 12.
Exactly.
Yeah.
Gives you your monthly inventory. So a normal inventory would be 4 times that number. So that'd be about what, 250 houses
On the market.
Yeah.
In order to turn almost 60 homes a month.
Yeah, exactly. That gives you not a seller's nor a buyer's market,
Okay.
right? You hear people talking about that. Okay, so here's the drum roll, please. Active listings in San Rafael right now, 38.
Are you kidding me?
It's ridiculous.
38?
Read
Only
that number
38?
again.
38. And then if you subtract out of that the homes that have been on the market for more than 30 days, i.e. they're priced too high, 25. So you have half a month's worth of inventory, which is insane. And really, it's not healthy at all. It's actually quite bad, right? It's not a healthy market. But it is what it is.
So, what does that portend for pricing?
Well,
I mean, does that create
I'll give you
a
an
temporary spike, or just because you get into bidding wars, people who need to move or need to move here for.
Well, that's
one
why
reason or
maybe those
another.
extended stay hotels are doing well.
Yeah, exactly. Well, I'll give you a good example. Last weekend there was house took offers on Sunday. They got 23 offers for one house. Somebody in my office wrote for $100,000 over the asking price.
What was the regular price?
The regular price was $540. Now,
wow, that's a big difference.
it was a little bit low, but
That's 20%.
Yeah,
Yeah.
but they wrote for $640. Gave the guy a rent back. Did all kinds of stuff to kind of woo the deal and make it look awesome.
But it wasn't all cash.
And they're back up. Yeah, it was not all cash.
That's the reason.
No. The other people were more money.
Jeez.
Yeah.
That's incredible. That
So
really
now
isn't
that's an
healthy.
extreme example, and
Yeah.
that listing was actually an out-of-town agent who priced it too low and a couple other factors. But the fact is that that's the craziness that's
What's
going
the
on.
deal about out of town, bro? I don't understand that. I mean, who's supposed to know your market better than your local realtors?
Yeah, exactly.
Yeah.
So in the short term, what that tells me is that at least for example, my business model, I'm making loans to real estate investors who are buying, fixing, and flipping, okay, in the Bay Area. And that seems to be a pretty healthy business right now. If you can get in and out of a house, buy it, fix it, flip it within, 3 to 6 months, based on the fact that real estate doesn't move that quickly, and right now it's a very tight market, that more than likely you're going to, if you remodel it correctly, you put it on the market, you're going to get multiple offers.
Yeah, in your business, your investors are very happy because the risk is mitigated tremendously by this lack of inventory.
Well,
Because if you
and
look
that's
at-
assuming that that your borrowers are buying correctly. And
Well, that too. I mean, you could still lose money on a flip, and people do.
Yeah.
And I have borrower clients who don't make a profit every now
Well,
and again.
if they don't do it right, you can overspend. There's a lot of things that can go wrong. But remember that the banks are basing their auction pricing off of what has already happened, not what's going to happen.
Yes.
So you've already got a little bit of a price in there too. So
So what you just said is the flippers are happy because it's a strong market for at least the resale. Now, whether or not you
Yeah.
can actually buy the house correctly and you're not bidding against a bunch of other real estate investors who might overpay for it,
Correct.
that's a problem. But then let's take it one more step. The long-term outlook, if right now we're in a unusual market where, because so many homeowners are still underwater, we've got a lack of inventory, it's not a normal inventory situation, and so homes are getting bid up. I think that's why I hear from a lot of people who have a longer-term vision, they're going, well, that they don't, this is not something that's going to last
Sustainable,
long-term,
yeah.
because ultimately home builders will come back into the market and build new product. Ultimately, people who want to sell but can't will be able to sell, and then what is that going to do in terms of pricing and potential appreciation? In other words, what they're looking out, they're going, you know what, I don't think it's 2002 or 3 or 4 all
Correct.
over again at this point.
Right.
Maybe we have a little bit of a you know, what do they call it in the stock market, a dead cat bounce. So we're seeing.
it's funny. I
we're
just
seeing
used that reference in a meeting the other day. Yeah.
So we're having a bounce here.
sorry to you.
But the
cat lovers out
thing
there.
about a dead cat bounce is that implies that it's actually going to go up and then come back down, and I don't think that's the case. I think what I predict is it will go up to a level that is sustainable, where there is kind of a balance between how much inventory, how many buyers there are, and then it'll be fairly steady there.
Well, what
I
about-
would tend to agree with that, but I guess my point is there is a significant portion of the population, including people who write about real estate, who actually do believe that we could that there's a number of things that could happen where we would see yet another dip in real estate prices in
like I said,
a year or two.
with the banks theoretically with the shadow inventory.
If
and
the
all
soon-
that.
if the shadow inventory does actually materialize, or we enter into another recession.
Well, I was going to ask
or-
also, what about like construction workers, plumbers, electricians, and framers, and all that? I don't know how familiar you are with what's going on there. Are those guys back to work?
They're back
now?
to work. Yeah, because what happened was there's so many projects now in the inner cities, San Francisco, and so forth, union jobs, where these guys were actually going to the outer areas and competing with the people that were in the Sonoma counties and the Contra Costas or whatever. They're kind of coming back, or they're getting work where they wanted to get work, and now they're not competing with these other guys. And so, yeah, I mean, a lot of those tradespeople are getting work.
Yeah, it's interesting, and that's true in some markets, but not in all in the Bay Area. The construction, I think we're still waiting for the construction business to come back in a big way, and I think we're close. I mean,
Well, especially the builders.
Edward,
Well, I think
you and I know of several people who are holding large plots of land, acreage, waiting for the numbers to make sense again, so that the
build a
home
house.
builders come back
That's
into the
it.
market. And I think we're
Yeah.
really close. 13 might be hopefully the watershed year where a lot of those home builders do come back in and start resurrecting some of those failed subdivisions from back in 04 and 05 and 06.
Yeah.
Yep, and at the same time, some of those have already been picked up, right? That are already being rebuilt.
Yeah, well, some of them were built, but they just couldn't sell them. And other ones are just now still raw land.
Right, or you've got builders that were halfway through, right?
Yeah.
We had 2 of those in Petaluma.
Well, gets interesting because those are the kind of people who could use Mark, because a lot of times banks won't lend on half built.
Well, but you know what they did was they sold them to these huge builders
Yeah.
that could absorb it. They sold it at 60 cents on the dollar, and now the builders are building them at not so good quality because they're required by the city to build the same structure, and you kind of get what you pay for there.
Wow.
We do bring up a good point that the banks are still very, very tight with lending, and that is an impediment. Home loan rates are fabulous, so you can get rates. I just talked to a client that just said, I just refinanced my home at 2 3/4 You got
15-year.
Yeah, he got a 15-year loan, so he was pretty thrilled. So home loans, hey, they're great, but if you're a builder or a rehabber and you want to get access to that inexpensive capital, forget
luck.
it. Yeah,
Good
good
luck.
luck. Yeah.
Here is the second commercial trivia question break. One of the star characters in this sitcom, this is a little easier, was named Lou Grant. What was the name of the show that we're talking about? The first 3 callers with the correct answer are going to win a free 3-day, 2-night stay at the Lighthouse Resort.
Even I know that.
Even you know that one. Even you. Okay. Here's the question. One of the main characters of this, here it is. One of the star characters on this sitcom was named Lou Grant. What show are we talking about? And we'll be right back. Excellent. Again, exactly 11 minutes. 11 minutes on the first one, 11 minutes on the second one.
Look at that. Knocking it out of the park.
So is it Mary Tyler Moore?
It is the Mary Tyler Moore
So I was going to
show.
say Caddyshack, though, right? Because isn't it also Ted Knight and the judge, Billy? Isn't that the same guy?
You know, I never saw Caddyshack, even though I hear it's
Wait, well,
It's
isn't it?
totally classic.
Isn't Lou Grant, or is Lou Grant the boss?
he's the boss.
He's
Oh,
the-
I was thinking
yeah,
of
no,
Ted.
Ted Knight.
Ted Knight, yeah.
Ted Knight, no, that's
I'm sorry.
Sorry.
I want you to kill all the golfers.
the dancing
Kill all the
gopher.
golfers?
I just don't like Bill Murray.
You don't? What?
I
How
do-
can you not like Bill
The only
Murray?
time I liked him was in the movie Scrooge.
You know what? I'm sorry. I need to go.
Yeah. I mean, I couldn't stand Groundhog Day with the, you know, the, I mean,
love
Groundhog Day is a
Groundhog
great
Day.
movie.
15 times in a row. I counted.
That's the point of the movie.
I know, but it was at some
That's the
point.
whole
I
point
thought
of the
they're coming
movie.
to take me away. Ha ha, hee hee, to the funny farm. You know. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host Mark Hanf of Pacific Private Money, California's fastest-growing private lender, and Rick Warner of Keller Williams Realty. He's a superstar. He's going to tell us a little. You're going to have to tell us when we get into email time about why you're a superstar, which is true. Has something to do with Zillow, but okay. Here was the second trivia question. One of the star characters on the sitcom was named Lou Grant. What show are we talking about? Rick, I know this is before your time, but what's the answer?
Mary Tyler
The
Moore.
Mary Tyler Moore Show. That is
Yay.
correct.
I saw the reruns.
Yeah, there you go.
That was not one of my favorites.
No, I didn't really care for it too
I was
much.
more like a Lost in Space guy. you
Yeah,
know.
exactly. That's me too. Morning, Will Robinson. And what was the other? You bubble-headed booby.
You bubble-headed.
Okay. Let's see. Email time. Rick, we got an email here that's right up your alley. In fact, it's funny because we were just talking about this. Are there still a lot of good investment properties available for purchase, or have they all been scooped up?
Yeah, and it is a good question. We kind of joked when we heard the
No,
question.
it's too late.
It's too late.
Sorry. Sorry, guys.
You're right.
Where were you last
Next
year?
question. Yeah. No, it's one of those things where it's so frustrating in our world because we're constantly trying to give people good advice.
Yeah.
And we've been saying for really, I mean, you can look now at a chart and we've established February 2009, that was the bottom of the market.
Yep.
Okay. Now, that was a few years ago and it's kind of scraped along the bottom, but now we can really see, okay, that was it. Now, could it retest those bottoms? It could, I suppose, as you were pointing out earlier, but I think it's unlikely. I think we've still got 2 or 3 year at least growth period ahead of us. So have they come up a little bit off of their lows? Absolutely. So, depending on where you're at, 10, 12, 14%. Is there a lot of growth left? Absolutely, I believe that there is.
And February 2009, that's about the low when the stock market was, too, if I'm not mistaken.
It's very close to that. That's correct.
And it did bounce around, like you said, for a couple of years. I agree with that because I don't think we actually saw any, real price appreciation until really when 2012 started. Because the fourth quarter, or at least, let's just say
Fourth
that
quarter 2011,
my
right?
clients who were buying, fixing, and flipping property in 2011, I remember clearly the fourth quarter being difficult for some of them because there were a number of people who didn't yet believe we had seen the bottom. Who
Correct.
still thought that we were going to have that more of a double dip.
Exactly.
Which we were experiencing in 11.
And
there was another dip.
It was
in many markets.
February 2009. It was the bottom. Went up about 7%, 8% that year, depending on where, which is kind of a lot intra-year though, right? So
Right.
it kind of had that was more of a dead cat bounce where it kind of went up and then came back down and retested that February 2009 low.
Yeah.
Yeah.
And then again, kind of
In
scraped around. So
2010?
depending on when you were in those years, depending on what month you bought, you literally could be like, oh man, I did well, I didn't do well.
Interesting. Tell us about the little Zillow thing that you were mentioning before.
Oh, well, just, you brought up the Zillow article. I'm one of their preferred people, so if you ever want to see, well, who is this guy, Rick, anyway?
I hear you got a lot of good
there's
reviews
some
in there,
pretty
too.
good reviews. I think I'm all 10 star. Yeah.
Okay, Mark, email time for you is, what makes investing in deeds of trust so much better now than before?
Oh, okay, good question. And so we go from investing in real estate itself to investing in a real estate related product. So at Pacific Private Money, we originate loans to real estate investors, and they're typically short-term loans, usually 12, 24, maybe 36 months, but generally speaking, they're short-term loans because they're using the money for a real estate investment purpose, and they plan to either sell the property or maybe refinance conventionally, and so they're looking for that capital to leverage their real estate activities for a short-term purpose, and they're willing to pay, well, comparatively speaking to what home loan rates are right now, they're willing to pay some pretty high rates for the use of your money, since the banks are generally not making loans to real estate investors right now. They haven't been since the market crashed. They have not come back into the market in any kind of way, and they're really just mostly saying no to real estate investors who apply for loans to buy real estate, particularly for short term. They're not interested in that market. And so the private lending market, also known as the hard money market, has really filled that gap. And so we're making loans regularly to real estate investors at rates of around 10% on average, and the private individual investors who are funding those loans, and these are Bay Area residents like you listening out there, and they're getting generally 9%. It's not unusual to get 1% below the note rate. That 1% pays for the loan servicing, which is what we do in house. So we originate the loan, we service the loan, we collect the interest payments from the borrower, and we pay that interest monthly to the individuals who fund those loans. And so the question was, why is now a better time to invest in trust deeds? And it is. And the reason it is because the quality of the borrowers is very, very high. We're talking borrowers, many of whom have high FICO scores. They have they've got good credit, they've got good liquidity, they're experienced real estate investors. So these are people that I love lending to because they know what they're doing, and they've many of them have a track record with me. They may have borrowed 2, 3, 5. I've got one investor, I think I've done over 10 loans to him, and he's repaid all of them fabulously. So so these are guys, these are really the safety and security features in today's deed of trust secured loans is so much stronger than it was 10 years ago. I mean, hard money 10 years ago was to really the distressed borrower who had their back against the wall and had equity, and you were making them a hard money loan, meaning it was based on the hard asset, the real estate. You didn't look at the borrower, you just assumed that they were a train wreck, and for the most part they were. Nowadays, we're not making loans to people who are train wrecks. We're not. I mean, there's still people who need money and are willing to pay for it, but we are not servicing that market. We're serving the market of well-capitalized real estate investors, many of whom, like I said, have good credit and strong balance sheets, and they're willing to pay 10% for the short-term use of the capital.
They just can't get loans from the bank.
But you still have the equity too.
And you have the equity, right? We're making like 70% of the purchase price is a very typical loan, meaning they're coming in with 30% down, which is not insubstantial, and then they're providing all their own capital. They have their own for rehabbing too. So you might invest 70% in a $300,000. They're buying a home for $300,000. They're getting a 70% loan from us for $210,000, and they're going to remodel the property and hope to resell it for $400,000.
So really, you're going to be at roughly 50%.
Your exposure actually decreases over time. You're actually improving the property and improving your equity position, your protective equity position. So it's a very, very interesting market now. We don't have a whole lot of time to get into a lot of detail about it, but if you want to,
what kind of rates are you providing to your clients now?
8 to 9% is the average interest we're paying to our investors.
That's amazing, 8 to 9%.
And that's a fixed rate during the term of the loan. So if it's a 12-month term with maybe a 6-month minimum interest guarantee, meaning that you're going to get at least 6 months worth of payments before they pay you off. The average turn time for a lot of our short-term loans is between 6 and 8 months.
Yeah, I can see that you'd have to put a minimum guarantee because these people could probably get a bank loan if you give them, another 6 or 8 weeks potentially, especially if they've been rehabbing it or whatever, and you don't want to get paid off that soon.
That's right.
Yeah, you
That's
want
right.
a good interest rate. Okay, guys, we're going to cut to our final commercial break, and here is the trivia question. When we come back, I've got a little article here about why sometimes earning $29,000 a year is better than earning $69,000 a year. Believe that?
That should be interesting.
That'll be interesting. Okay, here is the trivia question. Mark, you're going to like this one. One of the main characters of this adult-natured cartoon has a talking dog named Brian and a baby who has an English accent. And if I remember correctly, he's got a football-shaped head. What show are we talking about? First 3 callers with the correct answer are going to win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. And we're going to be right back. Don't touch that dial. Okay.
Got about 50 of those episodes TiVo'd.
Is that Family Guy?
Family
Guy.
Family Guy, the musical.
Family Guy is so
musical.
funny.
I don't. My wife doesn't
So
like
massively
that humor.
inappropriate. She doesn't?
No, and so I don't. It's kind of like we're so limited on how much TV time we have, and
Yeah.
No.
you got to pick your spots.
Yeah, my wife won't watch it either, but when my 11-year-old wants to crawl into bed and hang out with me, we'll turn on Family Guy. And she doesn't get half the jokes, forfortunately. Although
Fortunately,
another
yeah.
couple of years, I don't think I'll be able to watch it with
Yeah,
her.
he's isn't that funny? The older she gets,
What's
the
that
more she
mean?
can't
I don't know,
watch
honey.
it. Yeah.
Yeah, that's not funny.
Yeah. Well, I'll tell you, the funny thing with the Family Guy the musical, what happened was it was so funny. We did a segment one time that trivia was operettas, and Mark, I don't know any operettas are. The answer was I don't know, Family Guy the musical.
Oh, that's
Yeah,
funny.
that was my
your
standard
pat
answer.
Standard answer.
Family Guy the musical.
I couldn't stop laughing. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and Rick Warner of Keller Williams Realty. When we cut to the third and final commercial break, we ask this trivia question. One of the main characters of this adult-natured cartoon has a talking dog named Brian, and a baby has an English accent. And what show are we talking about? And this is Mark's favorite show, but you have to do it in character.
I was just going to do the theme song. He's our Family Guy.
He's our family. That's right, Family Guy. And
Yeah.
when we did operettas, Mark was always answering Family Guy the musical.
Family Guy the musical. I'm still waiting for that to come out.
I was going to say, at some point, that's got to come out.
Of course.
Okay, I have an interesting article here. It says, but this is why Americans have lost their drive to earn more. In a recent, let's see here, somewhat startling reality that a single mom is better off earning gross income of $29,000 than she is earning $69,000. And the reason is
That's got to be
because
because of government programs. that she
government
qualifies
programs,
for?
yeah, for
Wow.
benefits and all that. So what ends up happening is that for increasingly more Americans, it's now more lucrative in the form of actual disposable income to sit, do nothing, and collect various welfare entitlements than to work.
Well, I think that might take someone might take a little bit of umbrage to suggesting they're sitting around doing nothing, but
However, they still get paid. Okay, so get this.
Yeah.
For every 1.65 employed persons in the private sector, one person receives welfare assistance. For every 1.25 employed persons in the private sector, one person receives welfare assistance or works for the government. Of course, that's kind of the same thing. Okay, and then, so the punchline is 110 million privately employed workers, 88 million welfare recipients, and government workers, and rising rapidly. There's your government for you.
That is scary. That is scary. Well, we've heard talk in the news about, what happens when more than 50% of the American public, the American voting public, is receiving some form of government benefit. That's when
keep voting it.
Right, they
Sure.
keep voting it in, and that's the challenge with those of us who have conservative economic and financial bend here, and watching what's going on right now with Obama and Obamacare, and the
Sure. Democrats
taking over the state of California, and our taxes going up both on the state and the federal side, as well as increased regulations and health care, and it's scary as a small business owner. I do understand the once you start becoming quote unquote successful, and I've got employees. I've got eight employees in my little practice, and we're starting to see some Well, the last couple of years we've done pretty well, but oh my God, the tax bite is just unbelievable.
Well, some of these companies, especially like the fast food restaurants, saying, "Listen, we can't afford Obamacare, so we're just going to have to start laying off workers." And so suddenly now you add to the unemployment. Or what happens when people own rental property and it's in rent control districts? And if you can't raise the rent, but I'm sure PG&E gets to still raise their costs and insurance goes up and all these other costs go up, suddenly people who didn't want to be slum landlords, they maybe they turn into slum landlords, but maybe the hot water heaters don't get fixed as fast.
Oops.
And so people, instead of living in a decent place, suddenly, with all serious rent control, like, I know a couple of people who live in San Francisco and they've been in their same place ever since rent control was invented. And so, we're talking 30 plus years, and they're effectively paying, $500 a month for something that should be $3,000 a month.
Yeah, we all know rent control doesn't work, and it's interesting we're talking about taxes going up, but pretty much everybody knows that our taxes are up in 13, and we really, we're still in the beginning of the year, so we really haven't been able to haven't enjoyed the ramifications of that yet. But there's also something that's a little bit more insidious in my opinion, and that is the ever increasing regulations. And so in my particular industry, for example, I just talked about last segment about investing in trust deeds, notes secured by deeds of trust. Well, our industry, which is controlled or regulated by the Department of Real Estate, the California Department of Real Estate. I am a licensed real estate broker, and we are audited by the Department of Real Estate on a regular basis, and they look at our files and make sure we've got all the the right forms and disclosures, et cetera. Well, they're always adding new disclosure requirements, and in 13, effective January 1st, they did something new, which again, to me, just kind of smacks of the whole nanny state, and the government's watching out for you, but really what it means is you as the public are really just too stupid to know what you're doing and to make your own decisions. And so, for example, now we have to qualify investors to make sure that they are financially capable of making the investment. So there's now a financial qualification questionnaire, and what it basically means is now I have a form that essentially requires investors to fill out personal financial information about themselves that maybe they might not normally choose to reveal to someone like myself.
But you're almost like a fiduciary at that point.
Well, that's exactly it. Now, this is not unusual in the stock industry or the securities industry. So if you work with a financial advisor, a registered financial planner, now you would normally fill out information about your net worth and your income.
That's because they're covering the whole financial gambit.
Right.
You're very segmented. You got very specific, just trust deeds. You're not talking about their wills or estates.
Right. And I know it's already annoying a number of my investors who say, why am I filling this out? This is personal information that, quite frankly, I don't think you have any, it's none of your business. But in fact, as a licensed broker who is originating these privately funded notes, I now am required to collect that information.
But you don't have to audit it, so they can just tell you whatever they want.
Well, that's true. It's not up to me to It's not up to me to go. I need to see your tax returns and see what you're doing. But here's the reason for that is because a broker could be held liable if an investor invests in a note and it goes bad, and the broker didn't collect the information in advance, and it is determined in a court of law that investor
should, their last dollar.
Right, it's their last dollar. Yeah, little old lady, their last $50,000, they put it into a note in hopes of getting income, and it's the whole Bernie Madoff scare, on steroids, really, and so anyway, that's just one example of I think the government passing laws, and there's the law of unintended consequences, and the unintended consequence here is that maybe you are sophisticated and you can make the decision for yourself that you want to invest in a high yield returning note, but there may be brokers out there who now say, well, I'm sorry, Mrs. Jones, I can't accept your money because you don't qualify.
And what is the qualification? Is it typical, like, accredited investor?
It's not accredited, and actually it's still a very gray area. It's just different private lender attorneys are advising their clients differently, so it's not something I could get into in great detail here now, but it does, the form is pretty detailed in terms of the questions that it asks And so it does, and I do have a matrix that I've got back at the office that says if they're at this level, then you want to show them loans of this nature and of this size. So it's just made
It's all
everything
for
more
protecting the public.
Yeah, it's made it a little bit more complex.
It is a double-edged sword, and I don't, the fact is, though, Mark, you are a high-quality guy. You're only doing the right stuff for people, but there are people out there not doing that, and there needs to be some kind of something for that.
Well, there is, but you know what? This doesn't stop fraud from happening. And in fact, I'll share this with you because it scared the pants off of me this past week. But my company was almost the victim of fraud, and this was a fraudulent borrower scenario. And so this was a Southern California loan that came in, and everything looked legitimate, and in fact it had phone numbers on it. I spoke to the parties that were involved, the agent, the borrower, the seller, and the title officer. As it turned out, all of them were phonies. And
wow.
We caught it before. I mean, we realized there were things about this that didn't look right, and we found out. But it was just scary to think that had we decided to underwrite that loan and we put one of our investors in there,
poof.
Yeah, that money.
But the thing is, you would have, you would have gotten title insurance and.
No, because it was a fraud. The title company was a fraud.
You know what? Well, you know what? I had a situation like that, and you know what? The title paid. The
But
insurance.
there was no title.
insurance.
You're saying they were.
No. This was in theory going to be secured by First American Title, but
Okay.
it didn't go through.
Okay, guys, we are going to cut for our thoughts for the day here. And if you run in the rain, you will get about 50% wetter than if you stood still. And that's because it rains over there more than it does where I'm standing. I don't get that one. And
What do you mean you don't get it? You're catching more rain, of course.
okay.
You're running into raindrops.
There you go. Okay, and heed Yogi Berra's advice. Always go to other people's funerals. Otherwise, they won't go to yours. And
That's a
with
good
those
point. He's got a
words of
very good
wisdom,
point.
he's got a very good point. Tune in next week, or the week after, to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long. Cut. Just been tired here for a second.